So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha. Welcome back to The Daily Call. Today we're going to answer the question, how important is a stock's closing price? To me, a stock's closing price every single day is vitally important to the potential expectation for the next day. And I say this only on days that we see a huge move in the stock price. Because for me, the idea of people trading the stock during the open or afternoon sessions is important, but what's more important potentially is what people are willing to hold overnight. Because the risk that you hold overnight when you can't actually trade that security is very telling to me as to where the stock may or may not go in the future. So for example, if we see a stock have a huge run up early in the day, but everybody dumps the stock at the end of the day and nobody wants to hold it, well, what does that tell you? That tells you that maybe we might see some sort of reversal or move down the following couple of days. On the other hand, if we see a stock open lower, but then some news story comes out or something happens and people start buying up the stock and it closes much higher, we start to see a huge reversal. It basically closes at the highs of the day. That means that people are very comfortable getting into the security, and we might see a huge continued move in the same direction. So like I said, I think stock close is important. Oftentimes what I'll do when I, make trades or get into positions is I'll watch and monitor just, how aggressively people are buying or selling the stock at the close. And again, it's got to be something on the extreme. We're not talking about the regular days that are just a little bit up, a little bit down. We're talking about big move days, 2, 3, 4% type moves. What's happening during those time periods? What's the catalyst, and what can we maybe learn from those environments? So hopefully this helps out. As always, if you guys have any questions at all, please let me know. Just add them over at optionalpha.com/ask. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from optionalpha.com.